Hello and welcome to The Week in Beef, the podcast that drafts out all of the scrubbers to keep only the stud bull of beef news. This episode of The Week in Beef is proudly brought to you by Rabobank, Australia's most recommended agribank in 2025. My name's Lydia Burton and with me is Beef Central journalist Eric Barker. Eric, this is the kind of market you want to sell into.
Certainly is, Lydia. There's some confidence around, particularly in the feeder and restocker markets. We've seen feedlots travelling a long way to buy cattle, plenty of competition and prices rising as a result. And Lydia, talking of high prices though, timber. There's opportunities in timber.
That's what we've been hearing. The timber industry says it's desperate for the cattle industry to help bolster it, as it's currently importing more than $2 billion worth of timber each year. We'll have a look at how the two industries can work together shortly. And because we're approaching the final quarter of the bull selling season, genetics editor Alastair Rayner is joining us today on The Week in Beef to discuss the trends he's spotted and the prices. Plenty more here on The Week in Beef. But Eric, we love to start with the market, and it's been another huge week in this space. You've been watching the feeder market quite closely, haven't you?
Yeah, Lydia, had a feeder market update earlier this week where we sort of call around to a lot of the feedlot buyers and agents and in this case sort of a backgrounder as well to try and get a bit of an idea of what the market is doing. And it's been interesting because for most of that time there's been a clear $1 premium for Angus cattle over the typical Darling Downs flatback market, which is what most cattle are sold into. But this week, it seems that gap has shortened. Now, it doesn't look like Angus prices have come back in any big way, maybe slightly if they have, but the flatback prices is really on a roll. And when I did the feeder market update this week, flatback feeder cattle prices, out of the paddock were being quoted 4.40 to 4.60 cents. Angus prices were 5.30 to 5.40 cents. So at the very extremes $1, but you're talking more 80, 90 cents there. And just to give you an idea of where that flatback feeder market is up to, yesterday Beef Central publisher John Condon did his feedlot break even, and feeder cattle prices were being quoted 4.80 cents for a flatback. So I also spoke to a big backgrounder when I did my feeder cattle market update earlier this week, who said he was currently buying in anticipation of that feeder cattle market rising even further in the coming months. Let's just bring in Beef Central publisher John Condon. Condo, what have you found out with some of your inquiries this week?
Well, we do an occasional trading budget for 100-day grain-fed cattle, have done for the last 15 years, and what it's showing is that this quite dramatic rise in feeder cattle prices that's evident is certainly impacting profitability for lot feeders at the moment. So the bottom line numbers, we've shown a $236 per head loss on the practice of buying a feeder today, putting him onto feed in a 100-day program, turning him off in the middle of December, and selling him onto a forward contract price available at that time. So that's a dramatic change. The previous trading budget we did back in mid-June, there was only a $10 loss. So there's been an enormous turnaround. And it simply reflects more than anything else that this dramatic rise in feeder prices. I mean, we quoted $4.80 for a feeder in yesterday's budget. That was up over $1 a kilo on the same trading budget we did back in mid-June. So we always do a sort of a second scenario based on cattle that gain a little better. So we do a 2 kilos per day gain trading budget. We do another one on 2.2 kilos. Those cattle still showed a loss of $150 as opposed to a $90 profit back in June. So the break even out of all that which is the figure you need to given the feeder purchase price, the feeding cost. We needed to see a figure of $8.38 to break even on that trade of cattle going on feed now coming out mid-December. Now that has risen dramatically. That the break-even figure was only 703 cents back in June, so that's risen $1 $1.30 or more. And at the same time, the meatworks offering a forward contract for December, currently offering $7.70. So there's this huge gap between what the meatworks are offering for December cattle and what it's going to cost based on our budget coming out at the end of December. So it's probably clearly showing that processors have not yet reacted to this quite dramatic rise in feeder prices that's happened in the last 3 or 4 months. And people are telling us that processors are going to have numbers more like low to mid $8 range for January forward contract cattle, just to make the sums add up. So I think there's a bit of a standoff happening at the moment in this space. So it's a bit of a moving feast just at the moment.
It's an interesting time though, Condo, because while these cattle prices have been going up and it's quite a strong market for cattle at the moment, sort of grain and ration prices don't seem to be as much. The cost of gain equation, is that sort of driving feedlots to maybe look at some lighter cattle and keep them on feed for longer?
Look, it certainly is. The cost of gain is a really important part of this trading budget that we do. So what that relates to, it's the cost of feed, the rate of gain of the cattle, and consumption. So the figure we've calculated for the trading budget for December exit cattle is $3.36 a kilo. Now, you compare that to the purchase price of a heavy feeder at the moment at $4.80. There is a massive difference there. So what that means is it's going to incentivise lot feeders to purchase lighter lot feeders and add that additional weight in the feedlot rather than buying it out of the sale yards or out of the paddock as a heavy feeder. So we understand there's a fair bit of this already going on where instead of feeding for 105 days, for example, there's lot feeders who are currently taking advantage of the cost of gain disparity and feeding 120, 130, even more days. It's not quite as easy as it sounds because not all feeder cattle are built to feed on in this way. So they're looking for cattle that have got a little bit more frame, a little bit of a maturity pattern that allows them to feed those cattle on for longer periods. But certainly the gap that we're seeing at the moment between cost of gain and the feeder purchase price, it's probably as wide as I have ever seen it in 15 years of compiling these trading budgets.
Such an interesting time to be watching the market closely. So we appreciate your time, Condo. While we have you, you were at the Australian Ag Investment and Sustainability Summit, where there was a lot of talk around why Aussie super funds haven't fully embraced ag in Australia as an investment yet. What did you find out on what it is that's holding them back?
There was about 500 odd people in the room. So there's obviously an enormous appetite to get more information on this topic and get this dialogue going. While overseas super funds appear to show a higher level of interest in agriculture as an investment target, it certainly isn't the case in Australia. And that figure of considerably less than 1% of the funds held, 4 trillion in funds by Aussie super funds, is directed into the ag space. I think a lot of it has got to do with the regulatory frameworks that these super funds have to operate under. So a lot of it isn't simply a matter of ticking a box or sort of making decisions along these ways. They do have regulatory frameworks that do sort of influence their decision-making process. There was some interesting discussion about whether the actual fund members, like you and I, who've got funds, money stashed away in a super fund somewhere, whether we should be given access to a box on a form somewhere that simply says, I want to see some of my funds directed into agriculture. That did attract some interest from the audience and some discussion. One of the responses was, of course, that people who do self-managed super can effectively do that themselves and go and buy some shares in AACo or whatever if they want. But certainly for people who are in a publicly held super fund, those opportunities aren't quite as easy. But certainly, I think there was a widely held view in that room that this whole focus on natural capital that's now emerging is likely to stimulate Australian super funds to take a closer look at agriculture as an investment space.
No rest for the wicked, Condo. You've been flat out in the past 7 days, and we appreciate you sharing your insights on the week in beef. Stick around for number of the week. First, we want to talk timber and bull sales, so we'll catch up with you soon.
Looking to grow your agribusiness with insights that matter? At Rabobank, they go beyond banking. Tap into a global network of food and agri experts and gain access to cutting-edge research and market trends. Connect with leading producers via their agribusiness management programs, RaboTruck events and knowledge tours. Visit rabobank.com.au to learn more about the Rabobank difference.
Well, here is something I didn't know until this week. Australia has a growing dependence on imported timber. Despite vast forest resources, Australia imports more than $2 billion worth of timber and forest products each year, many from countries that are considered to be of high risk in terms of illegal deforestation. Now, this has prompted calls for the cattle and forestry sectors to work more closely together to fill this supply gap. On Tuesday this week, there was a joint Timber Queensland and AgForce conference highlighting the significant potential for graziers to integrate timber production with their livestock business. And here's what Timber Queensland CEO Mick Stephens had to say.
Well, the beef industry is sitting on a marvellous resource already in terms of, a lot of the area that they're grazing has native vegetation in that. And in the higher rainfall areas, that vegetation is capable of producing high quality product. And so what's in it for the beef industry? It can be profitability. It can be working smarter with grazing and the timber resources on their properties. We're seeing rising demand for timber and wood products in terms of housing and building and population growth. And so there can be some real synergies for beef producers, and also the carbon sequestration component of forestry and trees. It's a fast-track way to capture and store carbon.
And so what's in it for the timber industry to work with the beef industry in this way?
Well, the timber industry is growing in terms of the market growth. The demand is strong, and so what's in it for the timber industry is growing our resource base, ensuring that where those resources exist on private properties, that those properties are aware of the opportunities and maximising the productivity. So a lot of forest area is probably not being managed to its maximum productivity. And so through improved silviculture or forestry management, we can lift the yields from those areas. And so for us, it's more resource because we're a resource-constrained industry.
What sort of timber are we talking about? Can the cattle industry realistically supply the type of timber that the building and construction industry in Australia needs?
It certainly can in terms of the cypress and native hardwood. So when we're talking about the building industry, typically in house framing we'll use pine, plantation pine resources, but all of the decking, all of the cladding, all of the external posts and beams, that's usually hardwood, and those forest types exist broadly across the state and areas which are actively grazed.
And we heard at the conference that one of the issues is there's a lack of certainty for cattle producers to make the investment to invest in plantations that they can then harvest in the future. Some of them are actually taking the money they can get for timber now rather than investing and actively managing it. So is that a problem? What can we do about that?
It certainly is a problem. It's all around that sovereign risk, the uncertainty around vegetation management regulations. And so the scenario would be if a grazier invested in good forest management and then suddenly the government changed the rules and you could not harvest that area, there's no incentive to do that. And so we're asking the government to put in place a long-term right to harvest. I guess we're calling it a category F for forestry, where subject to appropriate management and guidelines and maybe codes of practice, you get a long-term right to harvest that. And so you have a protection against that risk, which would then enable graziers to invest in the forests.
Mick Stephens, CEO of Timber Queensland, speaking with Beef Central publisher James Nason, and you can read more about this on the Beef Central website.
Hello, I'm Terry Nolan from Nolan Meats, and you're listening to The Week in Beef.
So when we think of the bull selling season, you usually hear, big numbers, hundreds of thousands, millions, just more zeros every year. But we're going to have a bit of a look sort of behind the numbers and maybe go back down to some of the averages with our genetics editor, Alastair Rayner. It's the first week of September. We've got a fair few bull sales behind us now, fair few bull sales to go. Al, where are we up to?
Yeah, look, it's sort of entering, I guess, not the back end as much, but if you were talking in footy terms, we're probably about to go into the final quarter. A lot of our attention is going to be in northern sales, particularly the tropical breeds will start to really dominate the sales cycle now, and we'll see that will run through September and probably about, I guess, just into October, and then it'll just start to tail off and probably come to an end at the end of October. So we've really moved our attention north, and I think we'll see a bit of a changeover in the domination of the breeds being reported to those tropical breeds, particularly our Brahman and Droughties and Asana bulls will be soon starting to dominate that cycle.
In terms of the breeds that have been offered so far, what have you been seeing in terms of, are there standout breeds or one that seems to be more popular?
Yeah, look, I don't know that it would surprise anyone, but given that most of the sales in the middle and early part of spring occur in southern states, so particularly in New South Wales, the preference is really towards the British breeds, and so we have really seen a domination of those bull sale numbers by the Angus breed particularly. And that's, look, not a surprise given that they are, probably the largest of the British breed populations in southern Australia. I think we've seen, just looking across so far, close to nearly 5,600 Angus bulls have been offered for sale across largely New South Wales, a few southern Queensland sales, but we've got a lot of Angus bulls that have gone up. But then, we still have quite a good representation. Herefords, nearly 1,000 Hereford bulls have been offered. And then we start to see, offerings in the smaller categories of some of the other breeds like Speckled Parks and Shorthorns. Charolais have also had a fairly good run so far. So it's, if you like, I guess the way the bull sales are really reflects the way the population of cattle are dispersed across the country.
Al, what have you noticed with prices?
Yeah, I think that the prices have been as strong as we were forecasting, we were expecting. So there's a rough metric that basically we're looking at about. The average price of a bull is around about 4 times what we'd expect for a grown grass-fed steer or heavy steer. It's about 8 times what a weaner would be worth. So if you look at the current steer prices, I think, or the prices at the start of the season, I thought that we'd be looking at about an average of around about $10,000 or so. Just looking at the spring values at the moment, the average across all the breeds, not just Angus, but across all the breeds for the sales that have happened this spring, we're sitting at an average of $9,645. So not too far off what we expected potentially to be the case. What we have probably all noticed across the board has been that those top prices, or the sale top prices, have been back a fair way on last year, and particularly from that really big year of 2023. So it sort of says that we're not seeing, those huge astronomical prices that people were paying for bulls. Probably more a consolidation where people are paying for good quality bulls. There's willingness to purchase, 2 or 3. You could buy 2 or 3 bulls at about that $9,000, $10,000 price and be really happy about that to go into a commercial herd. But if you like, the seed stock guys who are chasing a new sire or a new genetic merit bull to go in their program, they're not having to pay the huge numbers that they were paying, earlier on. Having said that, there's a few outlying sales that we have had some really big prices. So, Cluny Range up at north of Warrialda, they had a top price of $300,000. They offered 201 bulls this year over a fairly good demand from people in northern New South Wales and a lot of bulls into Queensland. Last year they sold 187 bulls, or they offered 187 bulls, so they increased their offering a fair bit. Nola down in the Hunter Valley of New South Wales, they had a top price of $90,000 for one of their bulls, and then we see, I guess, 3 or 4 other studs that were 75, 60, and 55,000. So Burramuka, Rennie, they and Texas. So Texas Angus has always sort of dominated, I guess, the high prices. Their top price was 75,000 this year. And probably the other sale to watch will actually be happening today at Millamurra in New South Wales. It often sets, I guess, a benchmark for a lot of people in the Angus breed. But then once you sort of move from those operations back down, we're starting to see, the top prices in that 34, 30 down to sort of that 24. So strong demand, but just, we're not seeing huge prices being offered just yet.
Well, no doubt you'll be watching the Millamurra sale pretty closely today, Al. Before I let you go, what are you sort of expecting out of Queensland as these tropical breeds have their sales?
Yeah, look, I think that'll be a really good one to watch because, I was in Charterstow's last week. The season's fantastic through a lot of Queensland. There's a lot of feed around. The market is really strong and there's a lot of optimism, and that is really important in terms of, I guess, influencing the way that people approach their bull selling and their bull purchasing decisions. There's already been some good prices for Brahman cattle so far. So, we've seen Brahman cattle are averaging at this stage about nearly $8,000, and that's only in the southern sales so far. So we expect that, we'll get Brahman week to happen and so on. And there's a lot of people who are looking fairly confidently at their numbers. And I would be really surprised if we don't see some really good clearances and some really strong demand, probably in Brahman and Droughties, and definitely in the Sanders. There's always, Sanders are averaging at the moment $11,000 or nearly $11,000 per head. So again, that's not like the bulk of those cattle are not Queensland cattle yet. So I think we'll see, some really strong demand from people who are waiting for the tropical breeds to go into their programs. And I think it's going to be a very strong, very positive end to the season. I don't think, we're going to see, record set. Nice to be wrong if we are, but I think that what we'll see is people looking back and going, that was a very good, consistent and solid program, and one that's given a lot of people an opportunity to find the right genetics without going overboard in terms of their spending, I think.
So a bullish outlook.
Yeah.
Let's take our attention to number of the week now in terms of the numbers that are really telling the story of the cattle industry this week. I'm going to kick things off. My number this week is 5 because all key indicators have pushed above the 5-year average for the first time since early 2023. Now, I better give credit to my good friend Angus Baird, Senior Animal Protein Analyst with Rabobank for this one, because this information has just been released in the Rabobank Agribusiness Monthly Report for September. He said that all cattle prices had a stronger than expected month. The National Young Cattle Indicator rose 19%. Now, that's just in the space of 1 month from the end of July to the 31st of August that rose 19%. All classes in the same period rose more than 12%. But it was really restocker heifers that showed the strongest gains of 29% increase in prices for the month of August. Obviously, a bit of rain in the eastern states and particularly New South Wales helped boost buying activity. So that's my number this week, 5, because for the first time since 2023, all key indicators for the cattle market have pushed above the 5-year average. Kondo, what's your number?
So my numbers this week's a big one. It's 1.5 million, and it's extracted from MLA's half-yearly cattle industry projections report that was issued earlier this week. It refers to the forecast tonnage of Australian beef exports by the end of 2025. All of this year has shown a remarkable rise in month-to-month volume. If that number is achieved, it will be easily an all-time record. The previous record export tonnage was 1.34 million set last year. And perhaps the remarkable thing is it's been done with fewer cattle than people might expect. So carcass weight is obviously a big part of this equation, but the actual slaughter this year is likely to rise about 8.6% to 9.2 million cattle, but that's nowhere near a record in terms of head count. It's just that the slaughter cattle we are processing now are heavier. Obviously, there's been some contribution from slaughter cows out of Victoria and eastern parts of South Australia due to the drought, but regardless, 1.5 million tonnes is a colossal amount of export meat and clearly reflects this pent-up demand that we're seeing at the moment out of the United States and other markets for Australian beef, given the unusual trading circumstances that we've discussed in earlier podcasts.
Nice one, Condo. Now, you might remember that Eric's been trying for the last 9 weeks to win number of the week. So, Eric, what have you got this week?
Well, Lydia, you've gone low, Condo's gone high, and I'm just going to sail through the middle for a win. So my number is 1,700. That is the number of kilometres one lot feeder travelled this week to buy cattle out of Queensland. That's significant for a number of reasons. It's obviously significant to the market. That extra competition is very evident and something we were talking about before. But something we don't often concentrate on with these big shifts of cattle is logistics and the pressure they put on the livestock transport industry. Things like sort of time and safety and animal welfare are all a part of it. And it'll be a big topic at a field day on Amber Station at Mount Surprise in North Queensland next week, run by the Lethbridge family, who have been looking pretty deeply into, how the industry can better support livestock transporters. They've made some pretty big investments into this themselves, into refashioning sort of loading ramps and looking at new ways of doing things. Russell Lethbridge is on the board of Meat and Livestock Australia, and he's been a big part of the formation of MLA's Transport Hub, which is sort of creating, I guess, a little bit of a standard for these logistics and trying to sort of pull the livestock transport and the livestock industry together a bit closer. A significant number because I think it's significant to this week, but I think you'll also be hearing a lot more of these sort of stories going forward.
I think, I focused on cattle prices. Condo, you focused on export. And Eric, you've taken it right to the ground level, what's actually happening every day. You've given us a bit from this week and a bit to look forward to next week. So for that... got the studio audience in today.
Had to work
a round
hard
of
for
applause. Yeah. And I promised you a steak, so I better fire up the barbie straight after this.
I'm not going to knock that back. And a big thanks to Rabobank for their support of the Week in Beef for another week.
Absolutely. And a big thanks to the whole Beef Central team. We pulled in John Condon, James Nason, of course, had contributions, and genetics editor Al Rayner. We appreciate your time. And, of course, Eric Barker, thanks for your company.
Thanks, Lydia. Teamwork makes the dream work.
That's it. We'll see you again for next week's Week in Beef.